Hey guys, Marcelo here, Certified Financial Planner, and today I want to talk about investor behavior versus investment behavior. Now I want to start off by saying there's a huge disconnect between what the average investor has as a track record as far as long-term returns and what the underlying investment does over a long period of time. For example, the US stock market has done tremendously better as a whole than the average US individual investor. So the guy who manages his own money did a hell of a lot less, even though he was buying the companies within the US stock market, but the US stock market as a whole did a hell of a lot better than the average US investor. Now, why does the investment do better than the investor? The problem doesn't lie in the investment, because the investment is going to do its thing. An individual stock is going to do what the stock does according to the company. A real estate investment is going to do what it's supposed to do, what it's expected to do relative to the deal in place. But the investor has a whole bunch of factors that are going to determine how their behavior goes. You got psychological, you got expectations, you got emotions, all coming into play for investor decisions. The investment itself doesn't make any of its own decisions. The investor makes the decisions of being in or out of a particular investment, right? So the investor being emotional and being invested in whatever he's doing or she's doing, instead of buying low, selling high, might buy high and try to sell higher. And when that doesn't work out and starts going down, they'll buy low, they'll sell low, hoping to buy again lower, and then a couple wins here, a bunch of losses there, a couple mistakes, and the long-term track record is a hell of a lot less than what the investment did all along. So my job as an advisor is less about managing investments and more about managing investor expectations, and then by default giving them a better return, because what they did is, what I'm coaching them to do is just leave the investment there to do its thing. That's why I hire third-party companies to manage all of my clients' money, right? I hire outside people whose job it is to manage investments without emotion and give a predictable investment option that I can in turn present to my clients. Then if I can manage the client and manage their expectations in order to leave the investment there, they end up with the investment's long-term record versus the average investor's long-term track record, which is much lower. So if I can coach people and to do that, everybody wins, and the investment are left there to grow the account for the investor to reach their goals. If you have any questions regarding investing, financial planning in general, please visit my website or get in touch with me directly. And remember, my advice is free and always will be. Cheers, guys.